I'm no tech genius, but I knew if I wanted my business to crush it, I'd need a website now. Thankfully, Bluehost made it easy. I customized, optimized, and monetized everything exactly how I wanted with AI. In minutes, my site was set up. I couldn't believe it. The search engine tools even helped me get more site visitors. Whatever your passion is, you can set it up with Bluehost. With their 30-day money-back guarantee, what have you got to lose? Head to Bluehost.com to start now.
Good afternoon. Getting right down to business here. We are doing it live and doing more at 4 weekday afternoons right here in 790 KBC, live on the air, streaming live online worldwide at KBC.com. And yes, the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Rough day for stocks to close out the week and almost closing out the first quarter of 2025. The stock market moved sharply lower today and racked up losses for the week, with the potential for tariffs next week weighing on the markets today, and latest readings on the economy and consumer spending all in focus. The Dow coming in for a closing loss of 716 points today. The S&P 500 ending lower by 112 points, and the NASDAQ down nearly 500. We saw the volatility index, the VIX index, the Wall Street so-called fear index, spike today by 16%. All of this as investors took a closer look at the latest readings on the economy, showing core inflation up in the month of February, more than expected. Also, consumer confidence did drop this month on concerns about tariffs that will possibly increase inflation. That's the expectation widely. Investors expect the president will reveal his plan for reciprocal tariffs next week on April 2nd, an announcement that he refers to as Liberation Day. All three of the major averages did rack up their biggest daily drop since March 10th, and for the week, the Dow gave back 1%, the S&P 500 down 1.5%, and the NASDAQ down 2.6% for the week. We did see some movement in the bond market, with the yield on the 10-year note pretty much flat for the week, ending at 4.25%. Elon Musk announcing that XAI, his artificial intelligence venture, has acquired his social media platform X in an all-stock deal. This announcement coming in a short time ago. A move he said would combine their technological resources. In a post on X, that's formerly known as Twitter, Elon Musk said the deal values XAI at $80 billion and X is valued at $33 billion. The price of oil ending higher for the week, with the possibility that Venezuelan and Iranian exports will decline due to sanctions being major factors now as the U.S. applies pressure to both Iran and Venezuela. The price of oil right now hovering just above $69 a barrel. Fed funds futures traders are now lifting the likelihood that at least 3 interest rate cuts might be happening from the Federal Reserve before the end of the year. Congress back in session in Washington and wrestling with the House Republican budget package, including the plan to extend President Trump's 2017 tax cuts permanently and increase the small business deduction to 25% from 20% and lower the corporate tax rate to 15%. We'll get a live update on all that this afternoon from Washington, from Grover Norquist, the president of Americans for Tax Reform. Also this hour, we'll get an update on tourism and the restaurant business in Hollywood from one of the most popular tourist destinations and oldest restaurant in Hollywood, and that would be Musso and Frank's on Hollywood Boulevard, which has been there since 1919. I'll be joined live later this hour by Mark Echeverria, the Chief Operating Officer at Musso and Frank's, carrying on the legacy of Musso and Frank's as a fourth-generation owner. The restaurant has been in many movies over the years and, of course, a cultural and landmark and tourist attraction. But first, on your money, the markets, the economy, gold, silver, crypto, too. Gold at record highs today. Joining us live now, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, good afternoon to you, sir.
Frank, it's great to be with you, and reminds me of the famous speculator Jesse Livermore. You know, once the world's richest man, he said that you want to be long stocks in a bull market. And when I look at today's action, when I look underneath the hood at so many of the names that had been leaders, I think to myself, well, at least for now, we're not in it, meaning we're simply not in a bull market.
We wrote the book, How to Profit with Any Asset in Any Market, Any Time. Price is Primary, the title of your book. So you're used to dealing with these situations for a while there. It looks like the correction might have been over, but we got this volatility again this week and a pullback this week. Give us your assessment of this market and where things might go from here.
Well, the buzzword now, Frank, has become uncertainty, and it's not just my assessment. I mean, Jerome Powell used the term uncertainty some 20 times in a speech that he gave earlier this week. And in fact, the Beige Book, which is the Federal Reserve's kind of regional assessment of economic status, they used the term uncertainty 45 times. It was a record number of times. So, look, we always say that the market hates uncertainty, but it's hard to argue that President Trump's tariff policies are causing a lot of uncertainty, and not just among economists too. We got a 12-year low print in consumer confidence earlier this week. So even the consumers themselves aren't feeling too hot about the economy in terms of where we're standing. And I think all of that uncertainty about tariffs, which affect every element of our lives, has a lot to do with that.
Well, we don't blow an uncertain trumpet here on this program. You're coming through loud and clear here on all of this, and tariffs certainly the other big word we hear every few minutes here now. And we frequently have had Ben Stein on this program, who famously gave that famous lecture in one of the most famous scenes in American cinema in the movie Ferris Bueller's Day Off, that lecture on the Smoot-Hawley Tariff Act, which put his audience to sleep. So I don't often mention Smoot-Hawley here, but he did a fantastic job trying to explain it. And certainly President Trump using these tariffs as a tool to accomplish policy goals. But we're going through a rough patch here. Give us your assessment here of what this will continue to mean for the markets, for the economy, and indeed for consumers.
Well, for everyday Americans, Frank, it will be a tax, and autos are probably the most obvious example. The automakers themselves are already promising that you'll see the cost of a new car rise anywhere between $2,000 as up as $12,000. We really don't know yet. But as investors, it makes it very difficult to put money to work in these businesses that are very dependent on trade at a time trade is really under attack, which is why, Frank, the strongest assets in the market this week weren't even stocks. They really were metals. And you mentioned gold at an all-time high. And, one of the things I talk about in Price's Primary is that when we think of an all-time high, we always say, oh, well, it's at its all-time high. But it's one of many all-time highs. I mean, you and I have talked about gold at an all-time high for hundreds of dollars now. Now we're well over $3,000 an ounce. And I do think that trend continues. If you're looking to put money to work now, if you've got risk capital, I think you're much better buying a gold, silver, platinum, or palladium than trying to pick bottoms in Meta or Netflix at this point.
Let's take a closer look at those precious metals you mentioned. Gold actually above $3,100 today, up $27 at $3,117.90 an ounce, hitting record highs today. Silver is close to $35 an ounce, the highest it's been in, about 13 years or so. And platinum, let's bring up platinum here, just below 1,000. What's your assessment here on where these metals go from here, given concerns about how tariffs will impact inflation?
Well, a rising tide tends to lift all boats, Frank. And, from 2001 to about 2011, gold went up basically every year. And a lot of those other metals did as well. They had multi-year runs. And I do think now, just as we are not necessarily in a bull period for stocks, we are in a bull period for commodities, precious metals in particular. So don't let that all-time high in gold dissuade you. As I said, very often when there's an all-time high, another one is just around the corner. And I think having one part of a portfolio, where people often go wrong, Frank, is they make investing an all or none decision. It's either all in Bitcoin or all under the mattress. But to have, a 10 to 15, even a 25% position in something like GLD now or SLV, those are the funds that track gold and silver. To me, I think makes great strength. They're strong on the charts. And I don't see the public enthusiasm like you've seen, for example, for Bitcoin. There's a lot of gold bugs out there, but I don't think you see the massive public influx of the dumb money, if you will, that's coming to gold that likely will come in probably by the time it hits $4,000 or $5,000 an ounce.
All right. During the financial crisis, people were talking about diversifying, putting some money under the mattress, in the cookie jar, and some in your pocket. That's the kind of diversification that was recommended back in those days here. But now gold at all-time highs here, by the way, up 16% so far since the start of the year, at more than $400 since January 1st. Silver also higher for the year, also up 16%, and platinum up 8% just since the start of this year. Now, what about so-called digital gold? You did touch on briefly the cryptos here. We saw a big downdraft in the Bitcoin today, got down to around 83K. Right now it's just above 84,000. What about so-called digital gold in all this?
Well, Bitcoin is certainly faring better than Ether. You don't hear a lot about that. It's been very, very difficultly smashed. And Frank, I have to tell you, I mean, I've been never a tremendous bull or bear on crypto, but my fear is that, in effect, the story is out. The crypto ETFs have all launched. The crypto hedge funds are all active. The crypto story is out. The irony is that most people, more than 98% of them, don't use crypto for anything other than to speculate in crypto. So I'll pass, for me at least, on buying crypto and steer towards a more unlikely place to put money right now, and that's actually Europe. You know, Frank, people have a lot of smack to talk about Europe these days, but European stocks are outperforming the U.S. by the widest margin in history. And one fund that I like in particular is that which follows Poland. EPOL is the ticker symbol, EPOL. Frank, it's up almost 38% just this year to date, and not expensive when still compared to a lot of U.S. stocks. So, you know, I'm putting money to work in some unexpected places, and despite the politics, Europe is a lot stronger than the U.S. right now.
That is very interesting, and we've seen the German markets hit record highs too. Anything else in that neighborhood that's getting your attention?
Sure. I mean, I think it's a big, broad idea. There's a ticker symbol which is IEV. And this is a broad play on European stocks. And, you know, as much as, Frank, you literally follow tick by tick and give your audience every minute detail of the market, very often as an investor, you need to try to look for the big picture. So my expectation is that you're probably going to see what you've already seen this year continue, which is an outperformance of non-U.S. stocks. So a name like IEV will give you broad exposure to Europe, very low cost, and kind of a one-stop shop. So don't make it an all or none, but I think now is the best time I've seen in years to finally put some money to work in those international stocks. That's where the action is this year.
All right. Still, people ask about the Mag 7. We saw NVIDIA shares pulling back again today, down nearly 2, back to 109 and change. Apple sliding nearly 6 today at 217 and change. Tesla has been all over the place, mostly lower, down today, down nearly $10 at 263 and change. What about those names here?
The one that frightened me the most, Frank, that, you know, is felt the most like the big door gong signaling the end of an era were shares of Microsoft, which just last week actually tagged a 52-week low. You know, pretty hard to imagine a Mag 7 stock at a 52-week low, but Microsoft now about 378, hit 376 earlier this week. And, you know, people think a 52-week low is a buy signal. It's just the opposite. When a stock hits a 52-week low, it's a good indication the trend is downward. So I've been bearish on Mag 7 for quite some time on U.S. technology. Great companies, but stocks are way overdone. And I think you're going to see more downward pressure on the Mag 7, even as small caps, international, and commodity stocks outperform. Mag 7 is just not the place to be anymore.
So no bottom fishing there? Any bottom fishing at all at this point? I have a feeling you're not a bottom fisher to begin with.
No, because what we so often think of as being the bottom isn't. And probably the best example, Frank, long-term I can think for that is a company that's so famous that it goes by its name, and that is Xerox. Xerox Holdings has been publicly traded since the 1960s. But if you punch up Xerox today, XRX, its share price is not too far from where it was in 1984. 1984, if you can believe it. So sometimes you can have wonderful companies that have bull runs, but then they simply fall out of favor. And my sense is that the Mag 7, as wonderful as these companies are, we're going to see growth in other areas of the market in 2025. And these are still very expensive stocks. I mean, you're still talking about stocks trading at 30 and 40 times earnings. They've got room to correct. And, you know, Frank, when a stock like Tesla falls 50%, now it's got to gain 100% to get back to even. So don't buy weak stocks.
Let's take a closer look at Tesla here right now, trading at around 263 and change. Elon Musk making news this afternoon, announcing that his XAI has acquired X, the social media platform formerly known as Twitter, in an all-stock deal. And a move he said would combine their technological resources. Looks like X is going to be getting an injection of some AI resources here. By the way, the post that he put out on X said this deal that he announced values XAI at $80 billion and X at $33 billion. What do you think he's setting up for here with this big announcement?
Every day, Frank, I have to say, I mean, you are an astute observer of the financial world, the business world, for many years, and I don't know if you can think of a leader as unpredictable, as really creative, and often controversial as Elon Musk. Firing on all cylinders now. As you said, integrating AI technology into many of his ventures, in particular X. What's probably most worrisome, though, are shares of Tesla. Just the last 3 months, they're down by 30%. Excuse me, just year to date, they're down by about 30%, so dramatically underperforming. And some weak sales figures for Tesla out of Europe. Tesla for many, many years was the EV play, and they're not the only game in town right now. So Elon Musk, amazing entrepreneur. I think he's spread pretty thin right now, and so all eyes are going to be on Tesla. Can they try to mount a rebound? But, Frank, oftentimes when a stock is weak, it tends to stay weak. So I'd be very careful bottom fishing in shares of Tesla right now.
All right. Aside from Tesla, the other automakers have been weak, given the expectation here that tariffs will be imposed on automakers. The United Auto Workers Union president, by the way, cheering President Trump on this, obviously cheering for the American auto industry. And what about the auto names here that have taken a hit this week?
Well, the minute the tariffs were announced, they were down. I think GM was down 6% on the news of the announcement. And, tariffs are taxes, Frank, and they, as we said, certainly introduce another level of uncertainty into the marketplace.
Jim Rome takes on sports.
Why? Because you're not playing me.
With rapid-fire takes.
Y'all went from the Super Bowl straight to the toilet bowl. He's not over the NFL. The NFL is over him.
Scorching debates.
All the good, all the bad, all the ups, all the downs.
He's the Spitfire of sports smack.
Sorry for what I said because it was appropriate when I said it, but I can't say it anymore, dude. You are killing the game.
The Jim Rome Show podcast. Follow and listen on your favorite platform.
And what worries me is what that famous economist Bastiat, he talked about what was seen and what was also unseen. So no question, there's going to be tariff revenue that the president will be crowing about and probably redistributing. That tariff revenue comes from Americans. What we won't see necessarily are the higher prices and lost opportunities and higher costs and jobs missed and companies not created because of the expense, the added expense of those tariffs. As I said, even if it's just even somewhat what they're describing with autos, somewhere on the order of $2,000 to $10,000 per car, that's a lot of money, Frank. Even for someone of means, an extra $10,000 for their ride that's not chump change. So we are in uncharted waters. President Trump has brought us back to a tariff system not seen in decades in this country. So good time, I think, to have some cash on the sidelines because we are, as I said, no one really knows what's going to happen, and the news changes literally day by day.
And you're very much in demand, so we always appreciate your time, especially on a day like this. So we'll be looking for you on Fox Business and Fox News. I'm sure they'll be calling on you, and, of course, you always do a great job there, too, as well as here. We can't thank you enough for taking the call here on this big move here with the Dow Jones Industrial Average down more than 700 points here at the bell. We're back to 41,584. The S&P 500 down 112, and the NASDAQ down 481. Jonathan Hoenig, appreciate it very, very much. Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, we wish you a good weekend despite today's downdraft, and thanks very much for joining us live here today.
I'll be listening. Thank you, Frank.
Thank you very much. And out to the freeways we go now, 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. Well, actually not a good afternoon for the stock market anyway. The Dow down 716 points, settling at 41,584. The S&P 500 down 112 at 5,581. And the NASDAQ at the closing bell down 481 17,323. Tariff and inflation concerns weighing on the market again this week. The yield in the 10-year note is back up to 4.25%. The volatility index spiking today, up 16%. Gold at record highs, up $27 right now at $3,117.90 an ounce. Yep, you heard me, above $3,100 for the first time. Silver is just below $35 an ounce, down 26 cents at $34.82. And platinum also on the move this week. It popped above $1,000, just below $1,000 an ounce here right now. The Russell 2K Small Index also took a hit, down about 2% and down about 6.5% for the month of March. NVIDIA stock down $1.76 at 109 and change. Apple down nearly 6 today at 217.90, and Tesla down nearly 10 at 263.55. Strategy shares, formerly known as MicroStrategy, down more than $35 at 289 and change as Bitcoin took a hit today. Right now up about 500 higher to 84,240 or so. Right now, Ethereum is back below 1,900 at around 1,892, and Doge at the moment at 18 cents. The auto stocks were hit this week on tariff worries. Ford down 18 cents at 972. GM shares down 52 cents at 46 and change. And Stellantis down 48 cents at 11.33. Tesla taking the biggest hit today, down 9.58 at 263.55. We did get a new reading on inflation today. What we're told is the Fed's favorite inflation gauge. Not that anyone should have a favorite as far as inflation is concerned. The Fed's key inflation measure rose more than expected in the month of February. Consumer spending also posted a smaller than expected increase, according to the Commerce Department. A couple of reasons why we saw the market take a hit. The so-called Core Personal Consumption Expenditures Index, the PCE index, 0.4% higher for the month of February. That was the biggest monthly gain since January of last year, putting the 12-month inflation rate based on that measure at 2.8%. Core inflation excludes the volatile food and energy prices and is considered a better indicator of long-term inflation trends, and that's why it's called the Fed's favorite inflation gauge. Also, the report we got showed consumer spending accelerated 0.4% for the month, below the 0.5% that most analysts had expected. And now the latest news for you here on 790 KBC. Mottek On Money continues. 790 KBC. Good afternoon. Concerns about inflation, tariffs, a downturn in the capital markets, and now drama in Washington over tax cut plans. Congress back in Washington, and the wrestling continues over the House Republican package, including the plan to extend the president's 2017 tax cuts permanently and increase the small business deduction from where it is now, and also lower the corporate tax rate. Let's get an update on all that this afternoon. Live from Washington, we're joined by Grover Norquist, now the president of Americans for Tax Reform. Grover Norquist, good afternoon to you.
It is a good day. Good to speak with you.
Likewise, thank you very much. So give us an update on what's happening there with the tax cut plans, and how come this thing hasn't been passed already?
Well, a bunch of stuff had to be done, and the Senate had to get all of the that's been like 30 hours per person that Trump wants into the cabinet. They got all the cabinet done. They're now doing the other guys. So they've got several jobs to do. I'd like them to do tax thing first, but somehow they have to stop the government. Okay, here's the good news. The House, the Senate, the President have all agreed they're going to move forward using, on reconciliation, which is a special process that allows you to cut taxes, deal with spending, with a simple majority in the House and Senate. So you do not need a filibuster number. You don't need 60 votes in the Senate. You need 50 or 51 votes in the Senate and 218 votes in the House. The Republicans have that. So the Republicans in the House, Senate, and Trump together can pass tax cuts, spending plans. No Democrat votes are needed. And the Democrats are not interested in maintaining any of the Trump tax cuts or in any spending restraint. So it's not like there was a deal to be had there. What are they going to do? They're going to go work off of present policy. That means about 10% of the Trump tax cuts have evaporated over the last 10 years. The full expensing, 100% expensing, is down towards 60 or 40 because they didn't make them go all the way out 10 years, just as with the Bush tax cuts that begin to fade, go away in years 5, 6, 7, 8, 9, and 10. 10% of the Trump tax cuts have gone away. So to make all the Trump tax cuts permanent, you need to find about $400 billion out into the future every 10 years in order to, quote unquote, pay for making the Trump tax cuts permanent. You can do that by block granting Medicaid, not Medicare, but Medicaid, block granting it out to the states. When we came within one vote of doing that with President Trump 10 years ago, 8 years ago, rather, we were one vote away. That would have saved $1 trillion every decade in less spending just by slowing the growth of Medicaid, not cutting it, not reducing it, slowing the growth only, which gives you some idea of how quickly it's growing. That would allow you to pay for all you need to have the tax cuts be made permanent. So if, however, you said present law, well, in a year or two, all of the tax cuts go away. About $4 to $5 trillion of tax cuts go away. Taxes go up $4 to $5 trillion over the next decade, and you would have to cut taxes $4 to $5 trillion in order just to stay even. So it is very important that the Republicans came to understand we would use present policy, not present law, something that Obama argued for, so it's not something weird or different, and it will happen. So that is a huge hurdle. So now they're sitting there, let's make all of these tax cuts permanent. So we're not actually cutting taxes a lot. What we are doing is avoiding a $5 trillion tax increase. If you can imagine how some of the tariffs have shaken people up, tariffs on products all around the globe, it's got the markets concerned. Imagine a $5 trillion tax increase over the next 10 years. That's what the Democrats want if they stop the Trump tax cut from being made permanent.
That, of course, would be unthinkable and was a big issue, of course, during the presidential election, the difference between the two candidates on tax policy. Now, as I understand it, maybe correct me if I'm wrong here, the House plan calls for lifting the debt ceiling, by $4 trillion as part of the tax legislation. Some folks there in Capitol Hill are digging in on this, saying they'll never vote for the tax package if it contains a debt ceiling increase. So what do we need to know about that, and will that be a stumbling block here?
That is something that some Republicans have said before. The challenge is if a Republican says, I will not vote for a debt ceiling. When you hit the debt ceiling, if you need Democratic votes to increase the debt ceiling, it's not like if you don't increase the debt ceiling that it won't increase. It will increase, but it'll increase with Democrat votes, not Republican votes, because we're spending too much money. And this is not the place to fix that. The place to fix it is in reconciliation, bringing spending down, and reforming entitlements and cutting taxes to get more growth.
Expert entrepreneur Ed Milet is on a mission to max out your life.
So many of you have dreams in your life and you don't go touch them. You've got to begin to touch your dreams.
It's time to get laser focused on peak performance.
I'm going to give you very unique habits that I do on a daily basis. Say no more. Have deadlines in your life. Go to work.
And become the best version of you.
Take a day and serve that mission.
The Ed Milet Show.
Max out.
Follow and listen on your favorite platform.
I do believe we'll have the votes to get the debt ceiling increased. What that simply is just recognizes what's going to happen. And the president has made it very clear that he would be very disappointed if somebody tried to stop the process. If you do that, you hand all the power to the Democrats. Because if you had 10 or 20 Republicans who said, I won't do this, then you have to go to the Democrats to get the vote. And they would want more taxes and more spending. Why would any Republican who called himself a conservative hand power to the modern Democratic Party to be in charge of this? So at the end of the day, that is something that people in the past have threatened to hold their breath until it turns blue. And they've always made things worse when they did that. And I think at this point they realize that. Trump has a very calming effect in telling some of the Republicans who want to go out and give speeches rather than change policy, get back in here, help us work. Look, the president is bringing real spending restraint. What the Doge is looking to do, and Elon Musk, they're talking about $1 trillion a year in fraud and misspending that they're discovering. Now, I'm waiting to see that as it's spelled out. But Elon Musk is telling people they're going to have the real numbers that they're comfortable with, and it's in that zone that we're talking about. So the Trump and the other Republicans and Elon Musk are up for serious spending restraint, which will allow more pro-growth tax cuts. And it doesn't do for anybody to stand out in the middle of the road and scream, as opposed to get there and get some work done.
Looks like they had a big meeting this week, the so-called Big Six tax negotiators. Treasury Secretary Bessent, along with the President's National Economic Council Director Kevin Hassett, hosting this meeting of the so-called Big Six tax negotiators on Capitol Hill. Any other insights from that meeting and that you were able to pick up?
Yes, just this, that they are looking at serious spending restraint, which has always been difficult in the past. We didn't have an Elon Musk out there shining a flashlight at what was going on. And we're now able to see how much spending restraint is possible and necessary, and that we agree that we're going to go off of present policy, which makes making things permanent much easier for the things to happen. And the president has explained to everybody, I really need all hands on deck for this vote. This is not the time to go out and try and impress people with how perfect you are, even if that means damaging the country.
I just pulled up the Doge clock as we speak.
Yeah.
It looks like that number, it looks like they've saved $2,260 per taxpayer based on this Doge clock. They've saved nearly $254 billion so far. The national debt, by the way, clocks in at 36.6 trillion here at the moment. So we're totally up to date here on what's happening. And what do you think the estimate that you just gave? What was that for Doge estimated savings? $1 trillion a year? Is that what you said?
Well, that's the zone in which they're looking now. Elon Musk has said he's going to put together the numbers in such a way that people can see them and understand them. And that, you go in, you find a mess, you got to do a little calculation about how much of it can we fix, how much of it can we do immediately, what's going to take more time, what takes laws, what can be done through executive action. The president last night made perhaps the biggest decision of his presidency, and that is, by executive order, he said, the law which allows unionization of federal employees, passed and signed under Jimmy Carter, says that anybody can join a union, except not the military, not the uniformed military, not the CIA, not the FBI, and not any department or agency where the president says it would interfere with national security. And President Trump last night said the Defense Department cannot be unionized. It is unionized. There are 200,000 dues-paying members in the civilian workforce, and they interfere with getting work done. I've talked to former heads of the Defense Department who say it's ridiculous. You can't get people to work because they've got all these union rules. They go, I don't have to do that. The union rule says I don't have to do that. And there are people out there in uniform sacrificing for America, and there are guys sitting on their butts in the Pentagon not risking their lives, saying I can't be bothered to work too hard, so don't tell me. And by the way, the union says I don't have to. That is coming to an end. The Veterans Affairs hospitals are unionized. That goes away.
Grover, we'll have to stop there. Thank you very much for joining us live here. That is Grover Norquist, the president of Americans for Tax Reform. We'll look forward to continuing this conversation as we follow all this very closely with you. And thank you for highlighting that last very important point. And now we go to the freeways here in 790 KBC. Mottek On Money continues here in 790 KBC. Hooray for Hollywood. The movie business, tourism, restaurants. Most famous of all the restaurants there, Musso and Frank's. It's been there since 1919. And joining me live now is Mark Echeverria, the Chief Operating Officer at Musso and Frank's, carrying on the legacy of Musso and Frank's as a fourth-generation owner at that iconic restaurant. Mark Echeverria, thank you very much for taking the call here this afternoon.
Hey, Frank, I'm happy to be here, and thank you so much for including us on your show. And I got to say, you're the first person to actually correctly say my last name. I was 17 before I could spell it, and you get it right on the first try. Good job.
Thank you. Thank you very much. Well, appreciate that. And it's great to connect with you here on the air for the first time. And I know you had a big anniversary last year, 105 years there at that location, coming up on 106. Tell us about what's happening there at Musso and Frank's.
Well, so Musso's, we're 100. We just celebrated 105 last year. We're in our 106th year, as you say, and we are busier than we've ever been. And we're very fortunate to have such a loyal Angelino client base and customer group that loves what we do, loves the product we put out, and we're happy to do it. And things are humming along really well.
Well, I want to make sure I pronounce your name to honor your wonderful family that's been involved in the restaurant for decades, right?
Yeah, absolutely. Thank you so much.
I was there recently. Sam Rubin's memorial ceremony service was held there. A wonderful gathering of his former colleagues from KTLA. So I did have the chance to attend that important occasion. And thanks for making that happen. And tell us, obviously, a lot of history there. A lot of movies were made there. And tell us what people need to know about your place.
Yeah, well, I appreciate that, Frank. And thanks for coming out to support Sam and his family. That was really a special event for us. We have great relationships with everybody in Hollywood, and Sam was certainly among that. And so for us to be able to use our 105th to honor him was really special thing. So thanks for coming out. And, Musso's, we've been around Hollywood for so long, and I think it's an interesting study in how a business can thrive for 105 years in one location in a city that is constantly changing. And we take a lot of pride in developing relationships with our customers, and it's a very deliberate strategy that we've had for many, many decades. And when I took over full operations back in 2009, I had the privilege to be able to read through corporate minutes from 1927 onward. And I got to study how my great-grandfather and his business partner and my parents, how I got to study their decision-making process throughout all those decades and what their long-term goals were. And then in 2009, I was able to sort of craft a business economic model around what those strategies are. And so we love developing relationships with our local customers. And if you're an Angelino and you know about Musso's, you're a part of our family. And when you come in, we hope that you feel like you're part of our family. That's really wonderful.
Well, tell us a lot of concerns about the economy, inflation, job situation, and all that. And obviously, it's for a lot of businesses, it's tough to do business here in Los Angeles given the current business climate. How would you describe things at the moment?
We're very strong. We've got really good growth. We've had good growth for the past 10 years, which we're very fortunate for. And this year we're showing some growth as well. When it comes to inflation and what our commodities prices are doing, ever since COVID, things have been so volatile in that regard that we've kind of learned as restaurants and here at Musso's to be effectively reactionary to what our pricing is doing. And so we throughout the years, we've learned to develop sort of every case scenario models where if meat goes up, this week, this is what we're going to do. If produce goes up this week, this is what we're going to do. And most weeks both go up. So then we have a whole other model of what we got to do to react to it. So,
Mark, fantastic to connect with you here. We wish you all the best and continued success there at your fabulous place, Musso and Frank's, the oldest restaurant in Hollywood, been there since 1919. Mark Echeverria, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 Monday afternoon right here. Mottek On Money, 790 KBC.
Michael Rosenbaum and his Smallville co-stars take you behind the scenes of one of the greatest shows of all time.
We're going to watch every episode.
Join us. It's Big Talk.
You remember when I had to shave my head?
Oh, I think I was angry with this one.
On Smallville.
Yeah, I mean, I get it.
The scene you did, and this is the one that got me fired. Okay.
What?
Here we go.
I love the excursions with me and Welling.
It's everything that Superman stands for.
It's Talkville.
Talkville, we always talk about it. It's a great thing.
The Smallville Rewatch Podcast. Follow and listen on your favorite platform.